Welcome back, everyone, to Not Your Advisor with NYU Grad on Tuesday, May 14th. I missed everyone on Monday. For those that were curious, I stacked up a lot of my healthcare appointments yesterday, just like annual checkups, my cleaning for the dentist, and I had a few other personal appointments. And I like to stack these up in like one day if possible, just because I don't want to miss multiple sessions for things like that, unless it's obviously an emergency. So that's where I was yesterday, and it didn't look like I missed too much other than a lot of the meme stock trading. But let's get right into today's session. I'll try not to go too long because, again, we had very light volume, better than the previous few sessions. We closed the day at like 50 million plus shares on the SPY traded on average of 70-ish million, so it wasn't horrible, but it was still light. So let's go through the breadth numbers, shall we? So for the day, we had 811 new highs versus 106 new lows. We had 70% of stocks advancing versus 26% declining. Looking at the 50-day moving average, we had 37% of stocks below its 50-day versus 31% below its 200-day. Pretty bullish day, as you can see. Looking at the mega cap names, we have Microsoft up 0.69%, Apple up 0.62%, Google up 0.6%, 0.8% for Meta. Nvidia was up a stick at 1.06%. A lot of the semis were green. Amazon was up 0.27%, Tesla was up 3.29%. So a very bullish day for tech. Looking at the sector groups, only one sector was red, consumer defensive. Everything else was green. So leading to the upside was tech up 1.06%, real estate up 0.7%, basic materials up 0.6%, financials up 0.5%, communication services up 0.5%, healthcare up 0.5%. You get the picture. These are all percents. So fairly bullish day for the most part. I would say in the beginning of the session, it was a little shaky because we were just kind of hovering near previous day's close. But after the lunch break hour and all the algos and the CTAs got turned on, we went full rocket mode to the end of the day. Keep in mind, though, that the volume was light, and tomorrow is the CPI number, while today in the morning we had a very hot print on the PPI wholesale prices, but the markets kind of shrugged it off. Maybe we're just waiting for tomorrow, or all of the attention was on the meme YOLO stocks like AMC, GameStop, Roku, VinFast Autos. I've been covering this on Substack Notes all day, even yesterday while I was out waiting for my appointments. If you follow me and you want to trade long term, avoid these meme stocks because, yes, you can be up 200% in the day, but you can also be down 90% for the day. It's a very dangerous thing to play with this, just because of one person on Twitter who ignited the last meme stock craze with GameStop, Roaring Kitty, posting an image of him sitting up instead of leaning forward. Leaning forward versus sitting back. And then that caused all of this frenzied buying. It's just ridiculous. Another quick update. 50% of the poll respondents said that they have fired up to 1 through 4 financial advisors in the past. 50%. So one of 32% said that they fired 1 to 3 financial advisors, and 18% said that they fired 4 or more. So that's quite a bit for half of the respondents. And this is why, hopefully, you're here. You want to at least be able to grade their homework, right? And if you want to long term start to wean them off and take control over the portfolios yourself, this is one way to do it, to keep educating yourself. But that was a high and alarming survey result. As noted, the PPI came in really hot, almost double of what was expected. They were expecting 0.3, came in at like 0.5. I have posted in the show notes the S&P SPY ETF with all of the CPI calendar dates for the past 2 years overlaid on top of the SPY. Now, again, I want to reiterate, this is more correlation than causation. If the trend is up or down, it's not going to matter. Like if the trend is up, like we are right now, we could have a bad CPI print tomorrow and sell off for the day, but then the next day we can just rally. So be mindful of that. What stuck out? Yeah, a little bit heavier volume today, 50 million plus on the SPY, but still relatively weak on the volume. The 10-year finished at 4.45%. It's really a nothing burger, right? 4.45, 4.5. It's about the same. But if you look at the inverse of yields versus S&P, it's tick for tick, just opposite mirror reflections. We really need to see if we're going to hold that 4.4, 4.5 area, or if we're going to sell off to under 4.1 and stay like below 4%. Let's see. So what was strong? We actually had a pretty long list today. I'll go through them right now, as I usually do, like in rapid fire. Keep in mind that these are all percents, and I will try to cover all of them. But you had GameStop up 60%, PaySafe up 20%, Reddit 7.13, AI 5.21, SMCI 5.06, Yext 4.94, New York Community Bank 4.85, Marathon Digital 4.6, Affirm Holdings 4.47, Sprout Social 4.3, MicroStrategies 4.1, Zillow 3.9, Roku 3.49, Carvana 3.46, Freshpet 3.43, Zeta Holdings 3.3, Tesla 3.29, Broadcom 3.18, Ally Financial 2.82, Kava 2.78, Kinross Gold 2.77, Rivian 2.66, Qualcomm 2.59, Palantir 2.39, Dell 2.37, Roblox 2.26, ARK 2.15, DraftKings 2.13. What was weak? We had basically a very small list. VinFast Autos was down 9.8%. AppLovin was down 3.39. Klaviyo was down 2.33. What to watch? You have CPI numbers coming out at 8:30. Keep watching the Mag 7, the semiconductors. Watch yields and watch a lot of these economic indicators such as true up layoffs, credit card delinquencies, Indeed.com jobs data series by Fred, which I've all linked, as well as a true rate of unemployment. It's all in the show notes. Thanks for tuning in, free members. Premium members, please stay on so we go through some charts.